Holy smokers, guys, I just got back from vacation less than 10 minutes ago and I said, I gotta record a video. I gotta hop on YouTube right now. We gotta talk about this big rally in the stock market here today. Bank stocks had their best day in months. Literally every single stock I own was green today. That's when you know it's a good day, when you own multiple stocks and every single one of them is green. Phenomenal day out there. We gotta talk about all this. We also gotta talk about what is gonna happen over the course of the next, let's say, 6 months for the remainder of the year and kind of like what I see out there. I also wanna talk about some hidden things that are going on out there that not a lot of people pay attention to. Some numbers here that I'm going to share with you that are it's a really bullish sign. Let's just put it that way, guys. So ton to talk about. By the way, for the remainder of the month of July, I am having half off my stock market membership group. So make sure you get in there if you have not already. I don't care if you're a beginner investor, if you're an advanced investor, no matter what. If you want to take stock market investing up to the next level, make sure you get in that group. Enter code half off in the coupon box at checkout, and literally you'll take half off your first month and every single month after that, guys. So I cannot wait to see you guys in there. Let's get into this. Dow rallies more than 300 points as banks post best day since late March. All right, we're in July now, so it's been quite a while since banks had this good of a day. Stocks closed sharply higher on Monday as bank shares rose while concerns over a trade war between the U.S. and key partners dissipated for the moment. The Dow was up around 320 points. JP Morgan, Goldman Sachs, Caterpillar were some of the best performing stocks. The Nasdaq rose almost 1%. Amazon, Netflix, Apple, those type of stocks all had good days there. The banks was the big one today, okay? The market can surprise you with what it's focused on now. Now we're focused back on fundamentals, it seems. So if you guys already know, like basically we've been so focused on the US-China trade war and this whole trade war crap, and it has held back the stock market in a huge way because companies have been releasing phenomenal earnings, okay? The amount of companies beating numbers handily is off the charts, okay? Companies are having phenomenal earnings right now, and yet the stock market has kind of been in this like 24,000 range, and it's like, why are we not much higher, okay? When you look at the forward Ps are starting to get really low now, and you're like, look at growth amping up, and it's like, what is going on? Basically, the US-China trade war has just held things back, and now if that can start to take a bit of a back burner, then we can resume in a big way upward, okay? As long as that takes a back seat, because everybody gets so worried, all these fund managers, oh my gosh, US-China trade war, what's going to happen? What's going to happen here? If that can just take a back seat and those worries can kind of subside for a while, you know, the market can start its trajectory upward once again, okay? Now, there will always be something out there that they're pointing to and, you know, to be worried about or whatever, but I'm telling you, this US-China trade war has held things back in such a big way for the markets and for almost all stocks out there. If we can get rid of that, you know, we can get up in a big way, okay? I want to show you guys something here, all right? Homeowners are sitting on a record amount of cash and not tapping it, okay? A record amount of cash. U.S. homeowners today are getting richer by the minute, but they are less likely to cash in on their newfound wealth than during previous housing booms. As home values rise, home equity, lines of credit, often used to tap home equity, are flatlining, and the overall amount of money people are taking out of their homes is shrinking. The collective amount of so-called tappable equity, which is appraised value of the home minus the 20% most lenders require borrowers to keep as a safety net, grew by 7% in the first quarter of this year compared with the previous quarter, according to Black Knight, a mortgage software and analytics company. This is the largest single growth quarter since the company began tracking it in 2005. It is up 16.5% compared to a year ago. Homeowners now have a collective $5.8 trillion in tappable equity, the highest volume ever recorded, and 16% above the last home price peak in 2006. The average homeowner with a mortgage of $14,700 in tappable equity over the past year and has $113,900 available to draw. This is amount over the 20% of the value of the average home out there, guys. Nearly 80% of tappable equity is held by homeowners whose current mortgage interest rate is below 4.5%, and 60% is held by borrowers whose rate is less than 4%, all right? The average rate on the 30-year right now is around 4.8%, all right? So this is a kind of a secret hidden good news out there, and then we'll kind of get into what I foresee as kind of, you know, the coming months for the rest of this year in the stock market and whatnot. This is really good news because what this means, it means homeowners are being much more cautious than they have been in the past, which in my opinion is a very good thing, okay? If everybody's just trying to get as much credit as possible and trying to tap into their home equity and whatever, I think that's sometimes a scary sign and a bad sign if everybody's trying to do that at once. The fact that right now you have a record amount, $5.8 trillion out there as tappable equity in homes, just means people are much more cautious, and it just means people have many more demons inside them from the last recession. They're scared out there, and I hear it all the time from people. People just worried. Oh my gosh, my house is up quite a bit right now, but I'm wondering if I should sell it or not sell it because maybe something could happen again. I think this is actually a really good thing, okay? I think when everybody's bullish and everybody just thinks, housing prices is going to go up to infinity, we can take out lines of credit, we can, just be crazy and whatever, I think that's a scary time. That's when I start to worry and I say, oh man, maybe something is going to come. But when people are much more cautious out there, when people are a little scared to take risks, that's actually when I love it, because that just means, everybody just kind of, is on the sideline right now and not being too crazy. I think that's a really good thing, especially for the average consumer. As we know, the average person out there is not very intelligent when it comes to the financial markets, okay? Whether it be, real estate investing, stock market investing, like pretty much the average person out there knows virtually nothing. So the fact that they're, on the sideline right now and they're not going crazy with this type of stuff, I think it's a really good sign for the markets overall, okay? Now let's get into kind of where I see the markets going for the rest of the year. So, I hate making short-term predictions. As you guys know. I'm a long-term investor in companies. But as I look out over the next, let's say 5-6 months, the remainder of this year, I'm extremely bullish on the stock market as far as this trajectory. The reason being is we're going to have strengthening earnings into the rest of this year, okay? I see much more strengthening earnings. Also, another big thing I think I see is I think the U.S. economy is going to have some of its best growth we have had in decades, okay? Literally in decades, I think we're going to have some of the best growth in the United States of America we have had in decades. Now, we could talk about China and Europe and how those markets are going to grow. Who knows with some of those markets? But when I just look at the United States, I see some of the strongest growth we have literally had in decades coming in the back half of this year, okay? I think that's a really, really bullish sign for U.S. equities, and especially a lot of companies that do the majority of their business, in the domestic markets. Now, some companies that maybe or more internationally spread out, maybe some of those companies won't see as big a growth, but a lot of these domestic plays I think are going to have really strong growth going into the rest of the year. I think bank stocks is a big opportunity. I think bank stocks should be one of the best performing sectors out there for the remainder of the year. We have so much going for the banks right now. Strong economic climate, okay? Very strong economic climate. We have interest rates going up. That means the banks are going to make a lot more money, okay? Also, on top of that, we have a situation where a lot of these banks have insanely low forward Ps. Many of the banks right now have low forward Ps. Like we're talking like 10 or below, okay? Extremely low forward Ps. We're in a situation where the government is now trying to ease back some restrictions on these banks, okay? So basically what happened is prior to the Great Recession, we had banks that went too crazy, okay? And they got into a lot of trouble. Then, we kind of had Obama come in and whatnot, and they had to really tighten things up with the banks, okay? But maybe they tightened things a little bit too much, all right? Because, one way was too crazy, the other way was too tight. Now we're trying to find that perfect balance in there when you have a little deregulation in the banking sector that can produce for much higher earnings, okay? Actually, one of the people, have you guys ever seen the movie The Big Short, okay? The Big Short, the main guy who was behind the whole shorting of bank stocks back then and whatnot, that same guy is actually going long the financials now. He has been for the last year. He's been going long financials, okay? Meaning long the banks, because he sees interest rates going up. That's a really good sign. And also deregulation for banks. That's a phenomenal sign as well. So just something interesting to pay attention to there, guys. So I think it should be a real strong back half of the year. We'll just have to see, can the U.S.-China trade tensions, is that just going to keep, kind of getting in our face? Eventually, what ends up happening, what I found with a lot of things, is these trade tensions, they get talked about, and they get thrown in your face, and every time you open up the CNBC app or any app out there, it gets thrown in your face, and it's like, oh my gosh, trade tensions. Eventually, what ends up happening is people start, kind of pushing that to the side, and they're like, We've seen this story over and over and over and over again. Okay, whatever. And until you start seeing those, the economic numbers really get hit, and until you start seeing anything like that, it's like, okay, this is just a bunch of malarkey. This is a waste of my time. Let me get out of this. So that's what ends up happening, guys. I'm really bullish, as you guys know, especially for the back half of this year. I think it's going to be a really strong back half. We'll just have to see. Regardless, I own a lot of great companies that, should be doing phenomenal for years and years to come. So let me know in that comment section what you guys think is going on out there in the stock market. What is your forecast for the remainder of this year? I would love to hear from you guys as always. Make sure you get in my stock market membership group. First link down there in the description. Make sure you enter code half off at checkout to receive half off the first month and every single month after that. I can't wait to see you guys in there and see you take the stock market up to the next level. Thank you for watching. Have a great day.